Yes. So the balance sheet, remember, it's following the accounting, which is assets equals liabilities plus capital. So basically, we're going to total up our assets. Then we're also going to total up our liabilities and our capital so that we see so that they should match. Okay. So let's start. Let me just put the format for the balance sheet. All right. So the first item that we're going to put into our balance sheet, our non-current assets. All right. So if we refer to our question here, these are our non-current assets. All right. We'll start with the most permanent, the one that is there the longest, basically. So that's fixtures and fittings. All right. We put the cost 3,000 there. After the cost, we put the provision for depreciation. So remember how we calculated that for fixtures and fittings. Okay. We calculated the depreciation expense, then we added it to the provision for depreciation. Okay. Which is also called accumulated depreciation. As I said, every time you calculate depreciation, the depreciation expense, you add it up to the accumulated or the provision for depreciation. All right. So for fixtures and fittings, our depreciation was 450. Okay. And we had a provision which was an area provision of 1,400. So we added these two together and we get 1,850. So our provision for depreciation 1,850. So we get our net book value. As I said, the provision for depreciation, as the years go by, it increases. And as it increases, the value of the asset goes down. Right? So the value of our fixture and fittings is 1,150. Any questions? No, you can put them in terms of the most permanent to the least, or the least permanent to the most. Okay, like if we had land, land would be the first because land is the one before anything. Your business needs land, so land would be the most permanent. Then the next one is buildings. Then after buildings, it's fixtures and fittings. All right. After fixtures and fittings, then we go to equipment. Then computers or motor vehicles. Yes. Yes. Yes, sir. Yes, I'm recording. Yes. Yes, I believe. Yes, I'm recording. I'm recording. Before I started, I made sure I hit the record button. So, sir, that was your question. What about on the balance sheet? Okay, next we'll go to equipment. So, on equipment, let's see. Oops. Yes. The cost of equipment 70,000. The provision for depreciation, which is also called accumulated depreciation. Okay. Where you see accumulated depreciation, it's also the same as provision for depreciation. That's what I like to use accumulated depreciation a lot. So at times I won't write the exact word. So the cost 70,000. Provision for depreciation 30,625. So we get our net book value 70,000 minus excuse me 30,625. So our net book value is 39,375. Next is computers. Okay, so remember at first the computers were revalued. Okay, at first it was 8,000 kwacha, then revalued to 7,500. Okay, then also remember from general repairs there was a 6,000 that we used to buy another computer. So when we added 7,500 plus 6,000, we got 13,500. Provision for depreciation. Okay, we had this 4,000 which was already given to us, plus this 500. When we subtracted this 8,000 minus the 7,500 to find what was the loss in the value of the computers, this 500 here. So together, when you add 4,000 plus 500, 4,500. So value 13,000 minus 4,500, you get 9,000. After that, you just total up the net book value. The net book value is basically, and you get 49,525. So this is the total value for our non-current assets. After we're done with our non-current assets, we come to our current assets. Okay, so first one, opening inventory. Not opening inventory, so closing inventory. Okay. A value for the closing inventory, 8,000. Okay, colleagues, you put the value of the closing, not the opening inventory. The next item that comes is trade receivables. Okay, so according to our information here, it's where is it? Oh, yeah, 2,600. Now, colleagues, we have, remember this allowance for receivables, the allowance for irrecoverable debts, this one? Yes. This 150 kwacha is the one that we're going to subtract from the receivables value. All right. So you say less allowance for irrecoverable debts, 150 kwacha. 2,450. Then finally, commission receivable. This commission receivable, 800. Because you did something for somebody, so they're owing you commission. So 800 here. So we get the total value of our current assets, inventory plus our receivables plus commission receivable, 11,250. So this is the value of the total current assets. So now I want to get the grand total, current assets plus non-current assets, the grand total of our assets. So you're going to say 49,525 plus 11,250. The grand total for our assets, current and non-current assets is 60,775. Yes. Any questions? So just remember for the balance sheet, whatever is an asset, contra asset, liability, contra liability, and yes, okay. Mhm. We tackled that one. Was it last week? There's a video for that one. There's a video. Me too. That's what I got. So you're in the correct path, sir. You've actually taken us forward, not backwards. Yes, is that a question? So another hand raised up. Okay, next we go to, so we've got our total assets. Next we go now to our capital section. So we start with our capital, 30,000. Then you say add profit from the statement of profit and loss, your profit that you calculated, which we got as 2,675. Then you deduct drawings. 7,500. Okay, we get 25,175. This is the value of our capital. After capital, you start with your current liabilities. We have our trade payables, 11,100. We have our wages payable, 400 it goes off. Yes, this 550, okay, which was this 550. We have the bank overdraft, 3,650. And also we have our interest payable. Right from this adjustment here, where we found out the interest that had to be paid was 500, but only 200 kwacha was paid. So it means there's a balance of 300 kwacha owing. We add up 15,600. Then finally, the non-current liabilities, the bank loan, 20,000. So we total up our capital and our liabilities, and we get 60,775. So our assets equals liability plus capital, 60,775.